Bitcoin has just seen the highest weekly candle close in the history of its price action, just above $109,000. In today's video, we are going to be discussing what this means for the future of Bitcoin's price action, the possibility for continuations higher into new all-time highs, and even worst case scenarios. We are diving deep into the macro charts, the weekly charts, our 4-year cycle, as well as the short-term price action, discussing the key levels Bitcoin still needs to break through to confirm rallies into new all-time highs. We'll also be taking a look at the total cryptocurrency market cap and of course the broader traditional markets. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment, contacting our admin by clicking this name, checking out a 53+ month trading track record, or watching a 10-minute video showing you inside the channel. You'll get access to our main trading channel where we post trading setups with exact entries, targets, stop losses, trade justification, exclusive analysis, and more, including access to all of our group chats from the trading chart and education chat to the news, the help, the community setup, the general chat, and of course, much more. Go ahead and check it out. We'd love to have you in there. Let's jump on in. So as we can see, Bitcoin has had a fantastic weekly candle close. We've actually closed at a brand new high at around $109,140. This is of course above the prior weekly closing high, which was just under 109,000, meaning this is the highest weekly close Bitcoin has ever seen. Now, whether or not this will trigger a direct continuation to new all-time highs is something we're going to be discussing in today's video. But from a preliminary view, we can see, although we have had that weekly close above that weekly high, we have not quite yet seen that RSI breakthrough. So we haven't had the weekly positive momentum shift, but the fact that we have seen the weekly close above the prior weekly high increases the likelihood that we will see this breakout during this next 7-day period. So the potential for a breakout and a move to new all-time highs is definitely there. We just have one more obstacle to break through, and that is of course that major $110,000 resistance. We'll be discussing that in the video today. Let's start on the market data and come back to Bitcoin in just a second. So taking a look at our 24-hour volume's up 57%. We do generally see a little bit of a surge of volume moving into weekly candle closes. Of course, volume was very low over the weekend as we did have, I believe, Independence Day in America, a bit of a national holiday for you Americans watching this video. So we have seen a bit of volume come back into the markets. With that increase in volume, we have seen an increase in liquidations of 146% at a 173 million total liquidations. Moving over to the DXY is still dropping as expected. Again, as we move towards interest rate cuts, and as these cuts become more and more likely as a result of de-escalations in global conflicts, the tariffs and trade deals coming to a potential close, and even that new bill Donald Trump just passed, we do have more clarity around the future health of the economy, and therefore the Federal Reserve may have more insight to how they're going to move forward in regards to interest rate reductions. And with that uncertainty kind of fading away, we get a clearer look of what that is going to look like, when this is going to happen, and how that is going to develop. And that, of course, is going to be exceptionally bullish for risk assets. The only important thing here is, are we going to stay along this current course? Are we going to see the de-escalations continue? Are we going to see the wars kind of pick up again? Are we going to see the trade and tariff deals kind of fall through? Are we going to see the Federal Reserve deem this recent, I think it's the big beautiful bill, as an inflationary bill? If so, we could see a little bit of turbulence over here and the Federal Reserve remain quite pessimistic and uncertain, and that could drive some fear back into the market. So although the dominoes are lining up for interest rate reductions and the market to rally and risk assets to perform very well over the next few weeks, there is still some degree of risk. Now, this risk will most likely be cleared up as we move into the next Federal Reserve meeting. Of course, that is going to be in 3 days from now. We have got the FOMC minutes meeting. This will give us a bit of an insight in regards to how inflation's doing, and maybe some insight on their expectations moving forward. Of course, we have got the 15th of July, which is our inflation rates, and the 16th being PPI. We don't have interest rate decisions for quite some time until next month. So there's still quite some time away until we see any dramatic changes in expectations or any narratives that may shift as a consequence to the recent geopolitical and economic developments. Moving over to the S&P 500. The S&P 500 is looking amazing, guys. It is just touched 6,300. Absolutely insane stuff. Looking back since April, we have now seen a rally of 28% in just 3 to 4 months, which is absolutely wild for the S&P 500. And of course, we have been able to sustain above that prior weekly high, and while we remain above this prior weekly high, we are still going to remain macro bullish. Our targets, of course, 6,300, 400, 500, hitting our first target here at 6,300. Overall, the trend is very much bullish, expecting continuations higher, provided this level at 6,150 is able to sustain. If we drop below that region, we may see a sell-off into the 50 EMA or the 200 moving average at worst, but provided we remain above 5,700, the macro expectation is still going to be upwards, provided the policy facilitates that movement. So all in all, looking good, but I would say this is coming to the later part of this leg up. I think it is natural that we do see some sort of pullback now, particularly with, again, the RSI looking quite overcooked over here, and volatility really starting to widen between the 50 EMA and that price action. Looking over to Bitcoin, guys, like we said, we have a lot to discuss, so we'll go ahead and jump into that. Before we do, if you were interested in supporting the content even more, you can go ahead and sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll support me making this content for you on a daily basis, and of course, you'll be supporting yourself trading on exchanges I trust, getting access to those bonus sign-up rewards, and of course, all the exclusive campaigns we run on this channel. We'll play an ad and we'll jump right back into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and jump into it. So, as we can see, the weekly candle has just closed, and the weekly candle itself was fantastic. We have seen a brand new all-time high for Bitcoin in terms of the weekly closing price, around about that $109,150 level. However, with the weekly candle close, we have not seen that positive momentum shift on the RSI, indicating there is still some degree of risk that this is an exhaustion rally, and we are moving into, again, this bearish divergence, which could develop further if we see the RSI pull back, which could result in a correction. Now, although this is a potential, the probabilities that this does occur is significantly less likely now where we've closed the weekly candle above this weekly high, and on the short term, we are sustaining above that 5,100 and 5,000 higher low. So we'll come back and discuss that in a second. In terms of expectations from a contextual point of view, we are moving into price discovery now. Hence, we are moving into an area of price action, a horizontal basis, that we do not have we have very little historical trading volume at, and therefore it is very tricky to predict how the price action will respond, particularly as we start breaking through that 110,000 region. Even if we go to the short-term charts over here, we have very little historical data above that range high resistance of this higher time frame consolidation pattern, just as we have very little data above that 6,150 level on the S&P 500. And therefore, targets become number one, based on psychological levels, number two, based on measure moves of consolidation patterns, and number three, based on speculation such as the 4-year cycle theory and other theories surrounding how price action moves. So let's start on the 4-year cycle theory, as it does go ahead, it does kind of explain what is happening here and more or less what can happen. So one of the theories is the traditional cycle theory, 1064 days, would present a market top on October 6, 2025. The next theory is, of course, the negative 2-bar theory, which is essentially accounting for the diminishing nature of the cycles by around 2 months, which would give a top date of the beginning of August, which is the 1st to the 7th of August. Now, it is very important to note neither of these theories are proven to be right. We can only prove these to be correct in hindsight after the fact, and therefore they are not good tools to use to make short-term or even long-term decisions on as we approach the expected end part of the cycle. Whether or not this cycle sustains or breaks is going to be much more determined by the developing geopolitical tensions, the economic policy, and of course everything that helps to drive risk asset prices higher, more than just a cycle theory itself. This is not a driver of price action. This is a diagnostic method to explain potential key pivot points of the macro price action, which is a consequence of individual buyers and sellers as a result of shifting policy in the geopolitical and economic environment. Okay, we have to make sure we understand that this is not a predictive measure. It has been historically accurate to a degree. It doesn't necessarily mean it is going to continue to be historically accurate into the future. It is just to use as confluence, and most importantly, when we move into ranges of price action, such as price discovery, where we don't have any historical evidence to how the price action will react, it is somewhat beneficial to utilize these speculative models to give us some degree of guidance in terms of where these major pivots can occur from and when they can occur. So, instantly, the first week of August is a potential key point of which a top could occur, and the next one would be the 6th of October, these two horizontal red lines. Now, either which way we spin it, we can see, in conjunction with the fact that we have at a weekly close above the high, with the greater potential for a positive momentum shift occurring as a consequence to the weekly close, and again, the potential for a breakout of 110, and we know that a break of 110 results us in entering this low historical resistance range. We'll come back and describe that in a second, which increases bullish volatility and thus results in a dramatic move toward the upside. If we take all of that theory and then apply it to the context of what the 4-year cycle is suggesting in terms of potential top dates, well then saying or having a bias towards a upward move over the next 5 to 13 weeks or so is a potential. It is a realistic move that may occur. What will trigger that move from occurring is going to be, again, the break of 110, which we'll discuss in a second, and the political and economic policies that develop over the next few weeks and how those play out. For example, if we are looking at interest rates, we know already on the macro scale, interest rate reductions result in this mechanism playing out, okay? This mechanism is very, very simple. What it states that falling interest rates results in a weakening dollar. We know that a weakening dollar results in asset prices rising in comparison to the strength of the dollar. We know that dropping interest rate results in debt to service ratios falling, which results in increased available cash flow for both households and entities, which facilitates more spending, which enables cheaper debt, which facilitates companies and individuals to purchase assets at a better price in comparison to the dollar, as well as the the debt to service ratios are lower, therefore the repayments to service those loans are lower. So companies more specifically will utilize debt to acquire assets that generate income, use the income generated by those assets to leverage into more debt to acquire more assets as interest rates continue to fall. So this mechanism is a macro mechanism. It has a macro consequence which results in higher asset prices. So if we are looking at this mechanism, and we know it takes 6 to 12 months on average for this to really start getting rolling, we know the 4-year cycle top may be too soon, provided interest rates fall. So either we don't see interest rates fall, and thus we potentially see some sort of top occur over here, or we see interest rates fall, and we see that long-term mechanism remain true to what is expected based on the theory, and we may see the 4-year cycle break. So you can see how there's some conflicting data there, but no matter which way you spin it, we don't have all the pieces of the puzzle yet to be certain on what is really going to happen. We only have speculation, okay? And that is mainly due to the fact that this is a diagnostic means of analysis, and number two, the Federal Reserve hasn't been clear yet in their intentions of future interest rate decisions. But you can see how there's a few alternative routes in which we could see the price action take. We also have to note that the price action reacts to this mechanism in pre-tense, meaning it will front run this expectation. That is why we have seen the markets on a macro scale rally ever since we've had the first inclination of interest rate reductions. We had the first discussion of interest rate reductions back over here, and the market has rallied aggressively, even though we have seen, I think, 2 interest rate cuts since that point. The market has still front ran this major pivot for the economy. So what does this all mean for you? When it comes to the price action, we have to trade level by level, meaning it's all very well, talk about these macro things and, the interest rates and the 4-year cycle. But at the end of the day, this isn't really going to impact your individual decision making on the short term. Personally, and I can only speak for myself, I believe trading level by level, using high time frame as confluence to determine your decisions within your trades is the way to go, not the other way around. This facilitates you getting in earlier and also facilitates you being more aware of these developments and being able to react to them at a good time, rather being one step ahead of the market instead of 2 steps behind what is happening. So when we are looking at what would really trigger the next move up from a price action perspective, and again, it doesn't matter what causes that price action move up, whether it's good news or bad news or whatever happens, when the price action breaks these levels, we enter low historical resistance ranges, which facilitates rapid movements in price. So the next question is, will we sustain? But in terms of the breakout of this range, in terms of the next move into a new all-time high, we would expect an all-time high for Bitcoin to be reached when the price is able to break through 110. When we break through this major resistance, we not only see the breakout of what has now been, if we do a date range trend, around a 50-day long horizontal consolidation. The depth of this consolidation is quite large. It is around an 8% consolidation. It's a large consolidation, guys. We see a breakout of this large consolidation, but we also see a positive momentum shift here on the weekly, which would be suggestive that during this period of exhaustion, the sellers have completely been absorbed, meaning the buyers are fully back in control of the price action, ready to send it higher. If we do not see that positive momentum shift, this rally back up here is still going to be weakness. It is still going to be exhaustion. It cannot be trusted completely, okay? So for Bitcoin to rally to a new all-time high, we need to break through 110. Until when 110 breaks, no matter what happens on the weekly, there is going to be a downward risk, okay? Even if we just consolidate and consolidate and consolidate for the next 2-3 weeks, until this level breaks, there is going to be downside risk. Downside risk we'll discuss in a second. Let's quickly discuss the low historical resistance ranges, because both of these exist on the top side and the bottom side of the price action. You can see, if I go ahead and just delete some of this stuff here, oh, wrong button, just zoom it out a little bit, we can see here, there are low historical resistance ranges by the VRPV, right over here, and again above 110. So we know that below this 105, specifically 102 level, we enter a LHRR range, a low historical resistance range toward the downside, and a LHRR, so low historical resistance range toward the upside. Simply, what this defines is a range of price action. So a range is between two horizontal points, okay, where historical resistance is significantly lower, okay, whether that be because there is more volatility in that range or there is no historical price action, which facilitates a surge in volatility and often results in large directional moves that occur very quickly. So that means when we break above this region, the potential for a very violent increase in the price action is incredibly likely, just as if we break below 102, the potential for a violent correction is likely. But until we break out of this horizontal consolidation, neither of these two moves are going to trigger. We are going to continue to consolidate sideways, and that is why I say you need to trade by a level basis, not making decisions on these macro charts, but using these macro charts as confluence to make decisions on the short term in terms of what the expectations are of those moves, okay? For example, if we break 110, we would only be expecting all-time highs, and we would only be expecting a large volatile move potentially that can last 5 or 6 weeks as a consequence to the confluence we have across these weekly charts of the positive momentum shift and the 4-year cycle. Okay, if we're looking at the short-term breakdown, if we do see a breakdown of this 102k level, well then the potential for an all-time high massively diminishes, as we will be seeing a correction back potentially as low as 93,000, which will result in a correction back to the Gaussian channel upper band. If we see that happen, we enter a bear market, right? Below the Gaussian channel upper band in the 50 MA is bear market territory, meaning the all-time high is in, the top is in for an extended period of time. Will it be as long as a 12-month consolidation as per prior cycles? The answer to that would be no, it wouldn't, because technically the 4-year cycle will have been broken. So we can't expect a traditional bear market if we didn't see a traditional bull market. But again, even that statement in itself is utter speculation. It is utter speculation because we cannot be completely certain that the policy which promotes prices to go up or down will remain that way. It may change. So you need to be adaptable to the climate of the market. That is all it is about. It's about being adaptive. And that is why I say, if you are a bull or if you are a bear, you are equally as stupid. The reason being is because if you assign yourself to Team Bull or Team Bear, you are immediately blinding yourself to 50% of the potential market movements and opportunities. It is perfectly fine to be short-term bearish and macro bullish, or macro bearish and short-term bullish. You can have short-term biases or macro biases, but to only assign yourself to be a bull or a bear or a perma bear or a perma bull, you are only hurting yourself. Remember, you can come into the comment section and say what you want to me. It's irrelevant. What you think as an individual, as a trader, impacts only you and your profits. It is completely irrelevant. It is an individual game. It is a solo game. You can think the way you think. This is the way I choose to think, and it's been profitable and successful for me. Okay, so let's move over one more chart and wrap it up. The total cryptocurrency market cap. The last reason why I'm not completely sold on this breakout yet, other than the fact that we haven't seen the positive momentum shift, we also haven't seen the breakout on the total cryptocurrency market cap. This is really going to be the level we need to break to trigger the next market-wide move ups. And we're not just looking at Bitcoin going to all-time highs, but we're looking at Ethereum rallying to 3,400. We're looking at altcoins seeing a few weeks of massive rallies. Well, for us to be confident that's going to happen, we need to see this trend line break. When that breaks, that, in my opinion, for me personally, is going to be the green light for some swings. Thanks for tuning in. Have a fantastic day. I'll catch you guys all in tomorrow's video. Look forward to seeing you all then. Bye.